Okay, folks, welcome to Swing Trading today. This is Bob Desmond at the Contrarian Trader. It is at current 5:19 in the a.m. Eastern Standard Time on Tuesday, the 9th of October. Let's get to it. What we're going to do first off is what we typically do. We're going to go over the stocks that our members submitted for me to review, some of which are watch stocks. Then we're going to segue over into the pre-market activity and do a review of where the stock and currency markets are, some commodities as well. But before we get to it, I would appreciate, at current, we're doing a rebuild of this site. And in a conversation with my developers yesterday, the question became preference with regard to delivery of trade alerts. How would you like them delivered? Were you a member or are you a member of another service? Our default delivery method right now is email, but we're entertaining push notification and or text. So what is your preferred method of communication? Were you a member? And we will get whatever the prevailing answer is implemented on the website refresh, which is scheduled to be completed by, the target date right now is Christmas. So if you're not currently a member and you're entertaining it, sign up for the 14-day free trial offer. Prices are going up, but I will not raise dues on existing members. I never do. So let's get to it. Let's get to the stocks that our gold members are watching. TBT, the weekly chart. We are 1 penny shy of a new weekly high. Folks, this ETF puts you short of the 20 yield bond price. And for the past couple of weeks, not a couple of weeks, a few weeks, this has been a really good trade. It's a bit extended here. We're leaning into the third standard deviation Bollinger Band. It can press higher, but I would expect a pullback fairly soon. But that doesn't mean it can't move higher. All the indicators are looking rock solid. Daily chart, yeah. RSI at 77.42. And we've been really flirting with the third standard deviation Bollinger Band in red, and we're trading above the 2 standard deviation Bollinger Band in green. In short, we're not supposed to be here. Volume dropped off considerably yesterday. So while, again, I think we could still press higher here, I think that if you're entertaining opening up a new trade, or if you're looking to add to an existing trade, I think you're accepting a little bit too much risk relative to the reward. I would wait for a pullback, a nice bull flag formation, or a flag formation that's a continuation breakout pattern, and I would look to add more on one of those patterns and the subsequent breakout. The next chart up, Netflix, weekly chart. Okay, so, it's all over my YouTube channel. My opinion with regard to the FANG names. I have been bearish on them for a while now, several months, and it's proven to be the correct trade, meaning to be short. But is there the potential for a rally on Netflix? You can make the case. This is a weekly chart, if I didn't already state that. Okay. So let's begin with the indicators. Lower highs on RSI, lower highs on SOXS. So the trend is down. And these are momentum indicators, right? So not the ideal direction were you to be long of Netflix. Price, lower highs. We have broken down to lower lows. We have been consolidating along the 340 level. Where did we close yesterday? 349.10. Now, 338.82 was resistance a couple of times in the past. It is now acting as support. So I wouldn't go shorting Netflix, not at the support level. I would short the break, but not right now. More lower highs and lower lows. Now, getting to we've established that the trend right now is down for Netflix. Right? I'm confident in saying that. Now, is there a trade to be had to the long side? Daily chart. Daily chart, we have both RSI and SOXS trading down below the 50 level. I'm not happy with that at all. especially with the Stokes being down below 50. Because as I like to say, rallies tend to fade. So if I bought yesterday afternoon in anticipation of a rally because we had 2 days worth of bottoming action, meaning bottoming tails on these candlesticks, which would imply that we're at support level, we may pop here. I think that rally will fade. So where I long right now, or if I open up a position at where we closed yesterday or a bit lower, I would sell any rally probably up into the 20-period moving average, which at current is at 367.08. And I would get out. Volume is still high to the downside. So Netflix, very short term, I could see a rally occurring here. But from prior experience, I am confident in saying that this rally will fade and fade quickly. So if you're up $10 on the day, don't be a bit surprised to see it close down well off the highs of the day or get a reversal. So just be careful. If you have a profit in hand, book it. And don't stay too long. Control 4 Corp. Let's go with a weekly chart first. So this is a stock that has fallen out of bed. We were in a nice consolidation. We had threatened to break out, and that breakout was rejected about 4 times at this resistance level. We pulled back. You would have expected support to have held. Last week, it broke. This week, we are on the cusp of breaking down to new weekly lows. We did attempt to rally yesterday. That rally failed. So the probability of us breaking here is pretty good. Now, ADX, you have a head and shoulders set up, left shoulder, head, right shoulder. We have broken the neckline on green. Stokes, same deal here. Head and shoulders set up, left shoulder, head, right shoulder. We have broken the 45-degree neckline. RSI has broken down as well. All right. Control 4 Corp, daily chart. Not a pretty chart. A clear and defined downtrend on RSI. Stokes, I think that we may be near an end here, meaning we may double bottom out, much as what you saw back here. We'll probably overshoot to the downside at the 30-80 level. I would not buy below this support level. I would wait for a reversal bar to close back above the 30-80 level before opening up a long position. Now, for new members out there or for new visitors, what is a reversal bar, a bullish key reversal bar? This is a bullish key reversal right here. Same deal here. Same deal here. We trade down, we reverse to close up. And we must close back above this support level here. And let's call it, I said 380 earlier, let's call it 370. So expect an overshoot to the downside. And that's a good thing, because if you get a rally back to close back above the 3070 level, that's the market sending you a signal saying, okay, we have support below. This is being defended. You have reinforcements to help defend support, and it elevates your probability of making money off of that support level. So the support level looks good as long as it holds. So I would wait for that retest, show patience. Don't anticipate it holding and buy below 3070. Wait for it to reverse to close back above. That's the discipline. Continental Resources weekly chart. Fellow member Yancey, I should have used his chart. Sent me a chart, he annotated, did a nice job. Weekly chart he did. And Continental Resources is looking like it's doing a retest. It's down for the second consecutive week. That doesn't mean I don't like it. We broke out 3 weeks ago. Now we're pulling back as we normally see, and we're getting a retest of a breakout point. Now, if it fails to hold the support level by 4 p.m. Eastern Standard Time on Friday, and we're back down to within this trading range, I would avoid it like the plague. However, If we bounce and we hold above this support level, guess what? It's game on to the long side, because that support level is holding, and we have a clear and defined stop point next week. Meaning, if we make a new weekly low next week, then we'd want to be out, because that means that we're trading again back down to within this trading range. And the fact that we have a new weekly low indicates that the trend is still strong to the downside, and the probability of us closing in this trading range is pretty good. So we'd want to avoid it and keep our loss small. Let's go to a daily chart. Now, the daily chart is looking a lot like the weekly chart. We broke out of a bull flag formation, a very powerful formation. Don't underestimate this. This is like a coiled spring of strength. It took us 1, 2, 3, 4, 5 times to get through this resistance level, and it was rejected 4 of those 5 times. So this is a pretty good support level, I would expect. So we broke out back here on September the 25th, rallied up to 71.95, pulled back, and here we are today. I think that this is a retest of the breakout point. We may consolidate here another day or so, but I think this is a price point where you could add to your position or open up a position, that I may do so myself, should the support level hold. The closer we get to Friday, and the fact that we're still trading above the support level, raises the probability that it will hold. We did see volume rise. We have sequentially rising down volume. We want to see these volume bars decline a little bit, ideally to below average. Stokes are rolling over, but they're still well above the 50 level. So CLR, I'm cautiously optimistic on. Let's leave off with Denbury Resources weekly chart. Then we'll go over into the pre-market activity. DNR weekly chart. We're in a trading range here. The reason why I wanted to go over the weekly chart, I wasn't going to initially, but it's really critical when you have a stock that has a lot of overhead supply to take a look at your weekly chart, because the week of September the 24th, we were able to break through resistance last seen back here, back in January of 15, and it was significant resistance. Now we are approaching another resistance level at the 671 level. And what was the high of last week? 670. So you know that you have buyers that have been sitting throughout this nightmarish sell-off and consolidation, just waiting for DNR, which has been red on their trading screen since 2015, to turn green, and they are selling. They just want their money back. They don't expect to make any money. So it's going to take a while for DNR to work off these potential sellers back here. But once we get through it, I think it's a straight shot up to $9 per share. So if you have the patience, I would wait. I think the chart here is looking really good. You have a beautiful W formation. If you take a look at a monthly chart, it'll remove some of the noise and really illustrate the W formation. Here you have it. Beautiful. Here's your pivot point at $4.74. We're well beyond that now, but we do have a lot of resistance above, right? So it's going to take time to get through all of these sellers who held, and that includes institutions, folks. They held. They want their money back, so it's not going to be a clear straight shot higher for a while. We're going to need to work off some of the excess, and then we will proceed higher. Daily chart, let's see how we're setting up. Okay, so We have a double top and a breakdown on RSI, a double top, no breakdown on Stokes. Now, that's okay. I'm not even worried about these yet. I'm more concerned about price. I think that there's a good chance here that we break out. We had a nice run. We broke out of a bull flag setup on the 3rd of October. We've consolidated these gains. I think that there's a very good chance that we break out above this upper band of resistance on DNR. Down volume has been very light. That's exactly what you want to see in a pullback, a consolidation of gains. Now, I am a bit concerned about ADX green. We are flashing a double top as we are on RSI and Stokes. So the indicators are flashing some topping action. But what matters most to me is price and volume, and I'm optimistic about them. So DNR is looking pretty good. Now, if we break down below this lower band of support, and especially if we break down below $6 per share, you're going to want to avoid it like the plague. But as it stands right now, it's consolidating gains, and I think it's quite possible that we get a continuation breakout of this pennant or wedge formation, whatever you want to call it. In short, it's a continuation breakout formation. Folks, let's segue over into the pre-market activity. Let's see how we're setting up this morning. Okay, let's begin with the NASDAQ. The NASDAQ is down in the pre-market a little over 27 points. And that sounds pretty bearish, right? However, there's an upper band of resistance here. And what we've managed to do overnight, right here, is break out and close above the upper band of resistance, and we're retesting it right now. So while we're down this morning, I think it's quite possible that we rally off the lows of the session. We just broke down to a new session low and below this lower band of support. But if you take a look at a daily chart as we did last night on Market Wrap with members, there is cause for optimism that we may get a rally in the next day or so on the major averages. Now, longer term, do I think that rally holds? Probably not. But I don't think that they're going to let this market fall to pieces ahead of the midterm elections. So while, yes, weak this morning, I think that in all probability we are going to get a rally later on today. Now, as for the S&P 500, it too reversed off lows yesterday. We're seeing some weakness this morning, down 12.5 points, almost a half percentage point. But we are setting up for a weak open on the S&P 500. But as I mentioned with the NASDAQ, I think there's a very good chance that we get a rally back in the coming day or days on this market to close off the lows of the week. Again, do I think that that rally holds? Do I think we break out to new all-time highs? Probably not. I think that we were at a pivotal point given interest rates with this market. So we have been short of the market. We booked profits on our short positions yesterday. We booked profits on the SOXS, right near the highs of the day, in fact. And I would expect a pullback sometime this week, and we'll look to get long of the SOXS yet again. But we had to book profits. We were trading above the third standard deviation Bollinger Band in red, and it was simply unsustainable. Now, as for our other short position, which we booked profits on last week, was our short position of the S&P 500 when we were trading above the third standard deviation Bollinger Band on a 4-hour chart. Again, unsustainable. We did get a pullback off the highs yesterday, but as one would expect, we are popping higher this morning. I would not go chasing this market to the short side this morning. I think that we are going to get a rally. Could be wrong. Wouldn't be the first time. But I think that we are going to rally in either today or tomorrow. Let's take a look at the 10-year Treasury note. Now, when the note declines, that means that yields are rising, and we are down yet again this morning. So this is another 4-hour chart. What we're looking for here, I could see a case here for a rally, and that means yields will pull back. That would set the stage for a rally in the markets. We have a higher low. What we're missing right now is a higher high above this pivot point here at 124.135 on the 10-year Treasury note. And you have a double bottom setup on RSI, a higher low, and we are forming a handle here. And in fact, we are now breaking out of that handle. So I think that we're going to get a rally on yields, but this 4-hour bar is young, okay? It is at current 5:48. This bar opened up at 5 a.m. Eastern Standard Time. It doesn't close until 9 a.m., so a lot can happen. So if you're watching this at 8:30, a quarter to 9, and we're still sitting here or better, well, then the chances of a rally grew exponentially. But if we break below the support level, forget what I just said. That means yields are rising, and the market in all probability will continue to decline. Let's take a look at the U.S. dollar. Now, the dollar is strong again this morning. But, folks, the thing to remember here, and this is what I've been preaching to members, is that as every tick that the yield goes higher on the 2-year, on the 5-year, on the 10-year, on the 30-year Treasury bond note, so do our interest payments. We do not have money in the Treasury to say, okay, I need to cut a check for additional interest payments to pay our overseas creditors. No, we don't do that. What we do is we print more money. What does that do? It adds to the national debt, and we're now paying higher interest on that debt. Is that dollar bullish or bearish? It's dollar bearish. Now, were it not for the ridiculousness of what's going on over in Europe, I think the dollar would be in free fall right now, given our budget deficit. But as long as Europe, I should say the EU and Italy keep duking it out, the dollar is probably going to keep a bid under it. And as long as the Chinese keep devaluing the yuan, same deal. But eventually, they're going to work out the budget issues over in the EU, and eventually we'll come to an agreement with the Chinese. The day that that happens, I'm predicting that the dollar is going to go into free fall, because there's no other reason, with the exception of a safe haven trade, the perceived safe haven trade, to be in the US dollar. So understand why it's strong right now. I digress. Right now the dollar is looking good this morning because it's the least dirty shirt right now anyway. We broke out of this wedge formation. We have resistance above at 96 point, let's round it up, 0.12 on the Dixie. RSI is rising. So the dollar's looking strong. Now, as for gold, gold was strong this morning. It has since rolled over. It's still up, but it's given up a lot of its gains. Now, we did go adding to our gold mining position yesterday, and I'm going to be looking to add more, a lot more. So, members, stay tuned. And again, folks, before we shut down, if you could please let me know, what's your preferred means of communications? Were you a member, or if you're a member of another service besides email? Is it push notification, or is it text? Is it both? Is it too much to have all three? Just please give me your feedback. Leave a comment on YouTube, shoot me an email, whatever, it doesn't matter. And if you watch this on YouTube, hit that like button, leave a comment below. And in fact, if you watch the whole thing and you leave a note with regard to your preference, also leave a symbol. I'll go over that symbol on my next Swing Trading Today. I'll review the chart for you, much as I did earlier for members. Hit that bell, which is the notification button, and you'll get notified of when I put out a new video. If you watch this on the website, enter your email address. We hate spam too, and we'll send you out a couple of free trade tutorials. Everybody have a profitable trading day, and I'll talk to you soon. Be well.